Hey guys, good afternoon and welcome to the CNBC-TV18 Mumbai studio. I'm Pavitra. You're tuned into your stocks. We have a lot of queries which have come through, and for the markets, all of today has been pretty much a down day. But like we were mentioning, there has been a bit of a recovery that has come through. So for the Nifty right now, we're above the 22,000 mark, around 130 points lower, so around 50 points from the lows of the day. The mid-cap index has also recovered quite well, almost 250 points from the lows of the day on the mid-cap index. So right now, we're seeing just around 0.5% of a shave off on the mid-cap index. The advanced decline has also gotten a lot better. You have around 920 stocks which are advancing for around 1,400 which are in the red right now. But let's invite both of our guests on this show and get to all of our queries. We have Shahina, Mukadam joining us, as well as Vaishali Parekh. Shahina, Vaishali, thank you both so much for joining us and making the time for this show. Before I get to all of the queries, Vaishali, let me just come to you. It has been a down day. Yesterday, we did get that relief rally, and we were hoping that it would sustain, but there's definitely more selling pressure that we're seeing today, and it's pretty broad-based. So what are you just making of the kind of moves that we're seeing today?
Very good afternoon, ladies. And yes, market did open with a slight weakness, and we saw Bank Nifty not really participating. But on the whole, if on a broad base, if you talk about Nifty itself, it was very well managed because we saw good participation coming from ITC. We saw good participation coming from Bharti. So as such, the way we expected that, yes, if market breaks 21,900, we would be seeing a good downslide coming in. But that's not happened, and we are quite okay because 21,900 levels on the near-term support basis is held on. But Bank Nifty needs to be a bit convincing. We need Bank Nifty to move past 47,200. Till then, I would say Bank Nifty is still in the lull and IT sector is still in the limelight.
Okay, got that. So that is the call on the market right now. But let's also get to all of our queries. Then we have Kiran Damani, who writes to us from Hyderabad. Now, he holds 50 shares of HDFC Bank, which he bought at 1,300 rupees per share. He wants to know whether he should continue to hold or whether he should invest in some other banking stocks. Shahina, let me come to you on this one. I mean, we've been getting a lot of queries on HDFC Bank. I'm sure you can, imagine, and you've been answering so many of them as well. But tell us, for someone who is invested at these levels, do you think it makes sense to hold? Of course, the entire banking space has been under pressure, and HDFC Bank since the earnings came out.
Pavitra, it's always been a pleasure talking to you. And, hello, ladies. So basically, the investor has gotten at a decent price in HDFC Bank. While maybe in the next 1, 2, 3 quarters, you could see some bit of consolidation because, the growth or the profitability could be impacted, merger related. But I think it is becoming a very strong bank, and I would think it's going to be, gain market share and, be one of the strongest bank in the medium to longer term. So it is a stock that one holds in your long-term portfolio, and I would suggest that the investor continues to hold.
Okay, continue to hold. Vaishali, what are your thoughts on this one, on HDFC Bank, and how do you see it on the charts?
So I think chartically it is showing a bit of improvement. I would say that yes, the stock can show a good upside move, and one should continue adding more with 1380 as a support level. But further conviction comes only above 1470, 1480 levels. And once it sustains above that, I would be saying that yes, it's ready for a target of 1520 to 1550. So that is how we would be looking at it from the technical levels. So I would say yes, but for a longer term perspective, keep accumulating because I think it's showing signs of reversal.
Okay, so then both of our guests agreeing that for now you can continue to hold HDFC Bank. The next query we have comes in from Khushi Kadam, who writes to us from Pune. He holds around 30 shares of ITC at 350 per share and wants to know whether to hold or sell at current levels. This has been quite the week for ITC. So let me come to you on this, Shahina. Of course, after the news of BAT selling some stake in this company, right now, by the way, the buy price is also quite good, right? It's 350. The stock is almost at 430 right now. So there's been quite an improvement already. But from here on, how do you see ITC moving?
I think BAT having sold a part of their stake is a positive because actually it removes the overhang to some extent. Yeah. And I think they have maintained that they will hold that 25% plus stake for at least for some foreseeable future. So to an extent that is taken out. And then you have other factors that will kick in over the next 1 year. You have the hotel business, which is to be demerged, and the equity will be, the current equity holders will get equity in that. Also, I think, despite the problems that have been there in terms of demand in the last 1 to 2 years, consumer demand has been weak, but ITC has done pretty well, both in terms of cigarettes as well as in growth in the FMCG business. So I think ITC is a stock that one could continue to hold. There again, it's a portfolio stock. I personally have been holding it for a long time in my portfolio, and it's a good dividend paying stock also.
Yeah. Oh, absolutely. And like you were mentioning, a big overhang is gone. You saw an 8% move on ITC when the rest of the market was completely beaten down day before. So it definitely goes to show that. Vaishali, do you agree with Shahina that this is one to hold? It's a portfolio stock, or do you have some concerns looking at the charts?
No. I mean, that's what I just started my view on that, because today, in fact, we have recommended, it was acting as a defensive, and I would say technically, it has been consolidating at 400 levels for a pretty long time. So, well, we have recommended a buy, keeping in mind 400 should act as a support. So buy now and in decline. Well, near-term model comes at around 435 levels. Once that level is moved past and sustaining above that, you would be expecting a target of 460 to 470 to start with. So it's a buy from our side, from our PL technicals, yes.
Okay, got it. So buy on ITC. The next query is from Prisha Singhal, who writes to us from New Delhi. She says she has 60 shares that she bought of South Indian Bank, and she bought this at around 35. So she wants to know whether she should book her losses or whether she should stay invested and hope to maybe, see a little bit of money made on this one. Vaishali, of course, this month has been quite bad for not just South Indian Bank, for a lot of these smaller banks as well. So what are your thoughts on this? I mean, right now it's at 27. She bought at 35. Do you think it would make sense to hold?
So, well, I think it is really run up. So maybe it may take time to, again, show some run up coming in. So if time is not a problem, she should hold for the stop loss of 25. Else, I would say that, yes, time for shifting to frontline, I mean, the private sector banks, because those have not participated. And I think those are the stocks that will get Bank Nifty higher. So, yes, my focus would be furthermore on SBI or IndusInd or HDFC.
Okay, understood. That is on the banking space. Shahina, same question to you on South Indian Bank. Clearly, she is seeing a little bit of a loss made right now. Do you think she should stick with this and hope for some kind of turnaround, or do you think it's going to take a while before those 35 kind of levels can be seen?
See, there's an ongoing rights issue in South Indian Bank, and there the rights price is around 22 rupees. It's ongoing. So that rights, she would have got the entitlement for it. So she definitely needs to apply for those rights shares. I think the ratio is 1:4 or something like that. But now, once she has applied, once she has applied for it, she can take that opportunity to partly book some some of her, she can sell part of her shares as of now, because as you know, the RBI has come down with some restrictions, and for issuance, co-branding of some of their credit cards. So to that extent, over the next maybe 1, 2, 3 quarters, we are not sure as to, what will be the news that will evolve. I don't think it will be too major. Another thing, it is pretty reasonably valued. Even currently, it's less than 1 time price to book. So one can continue to hold the rest of the part of the portfolio, part of the equity in their portfolio.
Okay, that is advice on South Indian Bank. I'm going to take one more query right now. This is from Mayank Jain, who writes to us from New Delhi. He holds 30 shares of Schneider Electric at rupees 106. Oh, get this, the stock is over 600 right now, 605. And he wants to know whether he should remain invested, hope for more money to be made over here, or whether this is good time to take profit off the table. Vaishali, I'm sure this has been a crazy chart to track, right? I mean, just in 1 year, it has had an insane move. It's up almost 300%. Do you think it's time to be taking money off the table, just book your, profits and get out, or is there more here?
So yes, I would say book partial profit. Because I think we've seen, as you said, I mean, of course, we've seen a stupendous run. And even on the weekly and monthly chart, we are seeing that it's in deep overbought. So either book partial profit and wait for a dip, or keep a stop loss of 580 levels, because below 580, it is ready for a corrective move. So I would say, yes, partial profit booking should not be ruled out. And again, average it out at lower levels. So that would be my view for Schneider.
Okay, that is on Schneider. Shahina, what do you think about this one? Also with what's going on in the broader markets right now, some of these stocks which have run up so much are definitely seeing pretty significant corrections coming through. Do you think that Schneider is one where you should just book profits and get out?
The difference between Schneider and the rest of the stocks that have run up is that it has run up on back of a substantial improvement in their operational performance. So if you saw for 3 years before FY23, that is like, about 1.5 years back, they were making losses. FY23, they turned into profitability. Current year, the 9 months have been pretty good for the company. So what I believe is that, yeah, the stock has run up 300%, as you said. At the same time, there seems to be an improvement in the overall business. The company had done some restructuring, which has started to sort of pay dividends now. And it is in a very, I say, happening sector, like it's into power transmission and services relating to that sector. So I would suggest that she can continue to hold, keep a stop loss.
Okay, but what kind of target would you have, by the way, on this, Shahina?
It's difficult because once you have a 300% rally, it's difficult for me to give you a target. But I would say put a stop loss so that she protects her money.
Got it. That is on Schneider Electric. Thanks for taking us through that call. We do have to get into a short break here, but there's lots more queries that have come through, and we're going to get to that in just a bit. Stay with us. Hey guys, welcome back. You're still tuned into your stocks. For the market, there's not really too much of a change. 140 points lower is where we're at on the Nifty. The broader market, though, has definitely come back quite well. I mean, there has been a good recovery at least. So just around 230 points lower right now. This is, a big recovery from where we were just around an hour ago, around 0.5% lower there. The advanced decline also looking much better right now. But we have a lot more queries to get through, and we still have Vaishali as well as Shahina with us to answer all of those queries for you. So let's get to the next one. This one is on Asana Housing. Rajendran Bhan writes to us from Gurgaon. He holds 518 shares of Asana Housing, which he bought at 330. He is making losses and asks whether to book his losses or stay invested. Vaishali, this is a stock which has seen a very, very good rally. It's up 100% in 1 year. But of course, the problem here is that the entry price is very high. So from here on, how do you see this moving?
So I would say actually the trend is still intact. Only if we see a close below 260 levels, that would bring in further corrective move. So I would say that hold on, because if the stock is bouncing back, I think it would be a better level to exit from there on.
Okay, got that. Shahina, what are your thoughts on Ashiana Housing? Would you say that this is one where you can stay invested and hope for, some money to be made?
See, it's a small cap. In the real estate sector, I think in these current volatile times for the overall market, I would prefer that, the investor would shift to, book losses and shift to a large cap. Could be even in real estate, some of the leading companies. My view is that there is a bit of risk over here in this company. While they have good projects in Jaipur, we are expanding in Chennai. But if you see their return ratios, if you see their profitability and return ratios, they're pretty low. So, to an extent, I think one needs to play safe. So I would actually advise a switch.
Okay, maybe a switch to some of the other real estate companies could be a good idea. The next query is from Pramod Ganguly, writes to us from Nasik. He holds 50 shares of Renuka Sugars, which he bought at 55 rupees a piece. He wants to know whether to remain invested or to sell. Shahina, we're seeing a lot of the similar trends, right? A lot of these companies where I'm sure they've, really felt the heat in the past week or couple of weeks because of what's really gone down. Even this one, the entry price is quite high at 55. Currently, we're at around 41 on Sri Renuka Sugars. What would you recommend here?
An exit. Couple of reasons. One is, of course, that, being an election year, the government has and is likely to continue to put certain caps on various issues, like, for example, their conversion to ethanol. You have sugar prices that are likely to remain weak, being an election year also, and the production also is pretty high overall. Cane prices are likely to be higher. So to that extent, I think it is better to switch. They have been making losses. One can relook at it after a couple of months.
Oh, so you would say it's better to avoid the entire sugar pack for now then, right?
I would think so, and especially Sri Renuka.
Okay, got that. Vaishali, your thoughts on Sri Renuka, and also take us through the rest of the sugar stocks. Do you also think this is a space which is better avoided for now?
I would agree with China. So first of all, actually, sugar sector, I would really not take it from an investment point of view. Just look at it from a trading perspective. So right now, well, Renuka is in a downtrend. So I would say I don't see much of it, maybe just a bounce. But well, let's talk about the front line like Balrampur, Chini, and also technically it has corrected quite a bit, like how we've seen overall full sector getting corrected. But I would say stocks like Renuka and all should be Balrampur should be considered for trading perspective. I think Renuka is very down right now. Exit on every bounce.
Okay, got that. Exit on every bounce for Sri Renuka Sugars. The next query comes in from Kejal Shah, who writes into us from Gujarat. He holds around 1350 shares of HBL Power at an average price of 208. He wants to know the medium to short-term outlook for this one. Vaishali, this is also one stock which has really had a big run, right? How would you look at this now? And do you think that there's still money to be made? Because he's looking at a very short to medium term outlook. So this is not for the longer term.
So, well, even considering the short to medium term, I mean, depending, of course, not for a week or so, but I would say it was a buying opportunity. The trend is so strong when you look at the weekly chart and all. So, if just for a very short term, I would say that yes, 480 would lie as a hurdle over here. 480 acts as a crucial resistance. And if little bit of patience, then hold on because the stock is likely to retest 600 and perhaps higher. So that's how he can form his view. 480 is the near-term target.
480 is the near-term target, so there's more to go after the kind of big run that we've seen in HBL Power already. Shahina, your thoughts on this one? Just for a short to medium-term view, would you stay put?
Well, I think the valuations are very expensive. And so, in my view, I think the stock will consolidate for some time. So, if it's a very short-term investor, I would take my money off the table.
Okay, take some money off the table on HBL Power. I'm going to try to squeeze in one more query. This is Indira, who writes to us from Vizag. She holds 1,125 shares of a stock that we don't talk about very often, that's Pioneer Embroidery at 66. She's asking, should she hold or exit? And if she should hold, then what is the target price that she can look at? So bought at 66, it's currently at 41. Shahina, what are your thoughts on this one?
That she should exit, book her loss. Because it's a very tiny company, market cap is less than 125 crores, and it's got very high debt. And the promoters, I believe, have got, they've got about 60 to 70% equity. I don't exactly remember how much, but a large part of it, I think at least 1/3 of it is pledged. So I would call it as a highly risky stock in this market and exit.
Okay, exit Pioneer. Vaishali, do you also agree with that this is one that maybe you should get out of?
Yes, I do agree because technically also it doesn't have any, it's not showing any strength. So I would say yes, exit.
All right, both of our guests agreeing that this is maybe one that you're better, if you just can stay out of this. But with that, we're completely out of time on this edition of Your Stocks. Shahina, Vaishali, thank you for taking the time and for speaking to all of our viewers about these individual queries that they have sent in. We're going to wind down with the, with the news that the market has once again slipped below the 22,000 mark. So 0.7% gone now, but the mid caps are still holding a little bit better, at least, than what's going on with the frontline index. For one last time, thank you for tuning into Your Stocks. We have closing bell after this short break.